Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 8th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to see price push lower. Again, we're not quite to the previous session's lows here today in overnight and pre-market trading, but we are down 0.5%, down 14 points, and near the recent lows. We are also below the midpoint of the previous month's range, which is the bottom of the pivot range right now. And after rejecting those highs and rejecting the previous close and dropping away from 2800s, we've seen this thing go lower steadily with lower highs, lower lows so far. And again, if we take a look at the RTY, the Russell 2000, it's already well below its midpoint, which again suggests that we could be headed as low as the previous lows. So for the ES, we talked about before, 2820 to 2800 could be a rejection zone, and if price turns down, we could theoretically drop as low as 2600 to 2620 on the way down and still be a buying opportunity on the way back up. We're back into this distribution, as I mentioned before. So this is the first major challenge that we're seeing since the December sell-off, and we've rallied ever since. So we'll see how the bulls come in to defend, because again, if price can reject the midpoint by the end of the day and we're closing higher, say above 2770, that may look pretty solid for a continuation higher. So again, we're watching this previous month's low. Can price stay above that level or get back above it, 2747, or does price really break down below it and push the envelope downward, in which case again we're shooting for the previous month's low in that scenario. If you take a look at the NQ here, you'll notice again this one also pulling back over the last few days, but not quite below the previous month's low. It's right at it over the last 2 days. Again, a breakdown could be a one-day event, or it can be a major stop or an event that extends over the next several days. For the most part, this previous month's low right here is in play. That's about 68.50. That's that prior low, the breakout point, prior resistance. So again, that midpoint there, if it gives way, I would think that we likely have a push down into that level at the very least that could be seen. From there, we'll see if it picks up a little bit more steam back towards 65.50 or so. So again, we'll see right here. Do bulls come in, step in, and reject this thing and turn it higher, or do we see a breach of the 7,000 level? Alright, let's take a look at RTY. I mentioned this one a little bit earlier. This one tends to lead the market a little bit here. Had a good YouTube comment yesterday mentioning IWM RTY, the Russell 2000, already well below the midpoint. And you can see here it's sitting right at CVPOC, 1523. It's had quite a bit of action here recently, but it's sitting right at value. So if we just take this micro composite right here and take this D-shaped profile, we're right at value after trading from below value up and then bouncing off of resistance up here and coming back to value. Typically speaking, you may see this thing chop around here before it continues downward, and then maybe it continues to trade inside this D-shaped profile. So clearly RTY showing quite a bit of weakness here. The next support level down, two key levels to watch down below for RTY. Number one is the naked FOMC key level we have here at 1478. That's the January FOMC. Price rallied away from that level and never came back to test it. So upon failing to get to new highs, this level looks like a very, very high probability target of being reached on a return. The next level down from there is going to be the bottom of the recent support zone, and that comes into play at 1466, and that is a key level from a key range, and it's also the bottom of these lows. So that's 1466. So those two make a lot of sense right now, 1478, 1466 in the previous month's low. A lot of confluence for price to continue to push down, especially after breaking down through the midpoint. Any bounce into the bottom of the pivot range could be sold for a continuation down. That is the bear scenario right now, especially if price cannot reestablish acceptance back above 1550 fairly soon. Okay, let's take a look now at crude oil. Crude oil right now having a breakdown day. The previous session here rejecting off 57s yet again, and so that's something we've been focusing on in the trading room here. Is number one, how price has rejected the previous month's high, and then rejected the previous month's close and took them offered very sternly on the first trading day of the month. And then 57s is right here. This was a 57 high right on the button. It turned around. This one comes up above 57 into the previous month's close, turned down. Yesterday again rejected at 57s. I think it was 56.99, and now we're back to 55 and a quarter. So 57s and this entire zone here has been rejected, defended, absorbed by bears, and for the most part we have a very narrow 2-week range here or more, which suggests that we could be looking at a big breakout here pretty soon. I've mentioned before that 55 to 54.55 is still a major area of support for bulls. So if this thing comes into this area, I think bulls still will be looking to reject and try to turn this thing up. Any failure to hold 54.55 opens up a return to 51.25. So that's kind of the market structure to watch here in crude oil. Lastly, taking a look at gold futures, you'll see here gold bouncing a little bit here today. We talked about yesterday how that could be a rejection here. It looks modestly the part, but at the same time it's stuck at value and it never took out those recent support lows here. So you know, this could be a pullback within a downtrend right now, and that could be a selling opportunity that leads to more weakness to take out this low, at least one more round down. So you know, this one's hard to tell right now. You know, strong high, strong impulse sell-off. This doesn't look like the strongest impulse low, although it is a pretty decent low. Yesterday's rejection was pretty solid. 1280 came back and absorbed off the 83s and closed higher into the end of the day. Today pushing up above 93. So it's a pretty decent rejection. It's just not normally what you would see at the tail end of an impulse move, but we'll see how this continues to play out. Any drop here, again, we need a big rejection day on the lows, and that'll get us pointing higher toward the midpoint of this impulse move. Still searching for that. So right now, watching for any signs that this could be a failed high that leads to another round of weakness. Above 1300 would signal quite a bit of strength. Alright, that is it for now. We'll see how this plays out heading into the last trading day of the week. Happy Friday. Be sure to like, share, and subscribe, and I will see you on the trading room. Have a fantastic weekend. Take care.